Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is March 19, 2024. This is a Kickstart video where I take a look at three other major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Looking at the euro versus US dollar on the hourly chart, we continued the move to the downside in trading here today after falling below this swing area. The swing area was home to a swing low here. It was home to a swing low here. It was home to a swing high here, and another swing high right through here. We did, in between those swing lows and swing highs through here, we did have a false break to the upside, but then when we broke above this level, held it, and moved higher. So yesterday we came down, tested that level, found support buyers, moved marginally higher in the Asian session, back above the 38.2% retracement of this move up from this low to this high right here, but could not sustain that momentum. We fell back below the level after one last test right through here. We started to see increased momentum. That momentum took the price below the 100-day moving average at 1.08548, and then down to the 200-day moving average and 50% midpoint of the move up from, again, this low right here to this high right here. And both those lows came in at 1.08374. As you can see, the price did move a little bit below that level, but only briefly, and the market snapped back higher. And we're currently up retesting, or just retested the 100-day moving average. So we're ping-ponging between the 200-day moving average, 50% below the 100-day moving average on the top side, and that sort of makes sense from a technical perspective, doesn't it? If we break back above the 100-day moving average, we'll look toward the 1.08656 level, which again was that key swing area here. I would expect that we should also see some difficulty getting above that level if we do test that level going forward today. But right now, sellers are trying to lean against the 100-day moving average, and we're ping-ponging in between the two daily moving average 50% retracement level. Let's take a look at the dollar versus yen. We had the Bank of Japan come in and do what they're supposed to do. They tightened policy from negative interest rates to just above negative interest rates. They also said they were getting rid of the yield curve control, although they did say they would continue to buy JGBs, and maybe that's what's leading to the weakness in the yen, is that they're going to continue to buy JGBs, so it's not really tightening, is it? They also said they would stop buying ETFs and artificially supporting prices in stock markets and such. So we did see the dollar versus yen initially move to the downside and then snap back higher. That move to the upside took the price back into, I'm going to draw a little red box here. I like to do that in between this red box right here, where we had most of the price action, if not all, everything but just these little breaks to the downside through here over this period before breaking lower right here finally, and rotating further to the downside. So moving back above that level and then retesting the level here at 149.68 level was a clue to buyers to go right ahead, go right in and push this price higher, and indeed they have. And they move back up to the high of the swing area, or the high swing areas through here, where we had a number of different swing highs coming in play here, and finally here before the market gave up and moved to the downside. So it took all that time to rotate back up to, and we're back up testing the low of that swing area between 150.71 and 150.88 on the top side. If we do get above that level, that should open the door for further upside momentum for the dollar versus yen. But looking at the daily chart, also be aware that the high price from 2023 reached up to 151.91. That would be our target. That also corresponds with the 2022 high price within a few pips at the high. So getting above the 88.89 level is going to be key, and then we'll look toward 151.90 on the top side for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And if we look at that pair on the hourly chart, we also saw a rotation to the downside in trading here today, with the US dollar moving higher, this pound versus US dollar moving lower. That move to the downside came down and fell briefly to and through the 200 bar moving average on the 4-hour chart at 1.26723. That momentum could not be sustained, and we started rotating back up to the upside. The 61.8% retracement will be a level of interest before traders. That level was tested earlier today and found willing buyers against the level here when the market moved up and retested the 100 bar moving average on the 4-hour chart here before finding sellers to push to and through that 61.8 down to our 200 bar moving average on the downside. So Technicals are working here, which might suggest that the leaners against the 61.8% at 1.27113 is probably likely. If we do get above that level, then we should also see leaners against a 100 bar moving average, simply because that's what we did here and here and here. So, what we do know is that the dip buyers did come in against the 200 bar moving average on the downside. So that increase that level's importance going forward. We'll see if this level is now going to hold resistance in the pound versus US dollar. So there you have it, a Kickstart video which takes a look at 3 of the major currency pairs from a technical perspective. I hope you found it useful. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.